What up, fam? Welcome to Low Key Financial Talk, the channel where we break down money, crypto, stocks, no suit and tie nonsense. Right now, Bitcoin is down over 30% from 126K, and XRP dropped from almost $2.50 to $1.92, and everybody is panicking. If you're new to this and you just woke up like, bro, what happened to my bag? This video is for you. Now, I'm going to explain everything in a fashion where everybody can understand, and I'll stop and I'll break down and define the big words so nobody gets left behind. And that being said, let's get it. This video is for educational and informational purposes only. I'm not a financial advisor, and nothing in this video should be taken as financial, investment, or legal advice. Always do your own research and consult with a licensed professional before making any financial decisions. All right, so what actually happened this week? This is a quick summary, okay? Bitcoin and the rest of the market lost over $1 trillion in 10 days. $1 trillion, that's more than what Nigeria makes in a year. That's a lot of damn money. And we got stocks, they're falling too, especially the AI companies. Everybody selling risky stuff and running to safe places. That's why the crypto market is looking bloody right now. I mean, extra bloody. Reason number two, and this is the hidden villain, Japan. Okay? Japan's bonds blew up like crazy. Okay? They blew up. Okay? Big word alert. We got to talk about bond yields. A bond is basically an IOU from the government. When people say Japan yields are rising, it just means Japan is now paying more interest to borrow money. For like the last 20 years, people almost paid zero interest. That's super cheap. People borrow Japanese yen to buy US assets or any other investments. But now that the Japan's yields are rising, they have to sell those assets that they bought to pay back that money. And the reason why those yields are going up is because Japan is doing huge stimulus, meaning they're giving their people money, which causes higher interest. And because of the higher interest, people don't want to borrow yen anymore to gamble. Reason number three, the Fed. Two big words you're going to always hear: quantitative tightening and quantitative easing. Now, quantitative tightening is the Fed taking money out of the system, kind of like what they've been doing for 3 years, sucking out cash like a vacuum cleaner. And then quantitative easing. That means the Fed is printing new money and pumping it into the system to keep the economy floating. The good news is December 1st, the vacuum turns off. But the bad news is, for now, they're not turning on the money printer. Not yet. Everybody was hoping that they would, but they really need a reason, and we have all the reason right now. But we'll get into it. Okay, reason number four, the AI bubble. And right now, a lot of people think that the AI stocks like Google, Nvidia, Meta are in a bubble right now. Michael Burry, the dude from The Big Short, who called the 2008 housing crash, just came out of hiding and basically said AI is the next big lie. He's basically calling these companies out for making their profits look bigger than what they actually are. And trust, when people believe that the AI party is over, they're going to sell those stocks. Now, Bitcoin and XRP sold off because they move in tandem with these markets, at least for now. Reason number five, the U.S. economy is messed up right now. Thousands of people just lost their jobs. Tech layoffs, it's still happening. We just had a government shutdown for weeks. People weren't getting paid. Important numbers that the feds need, like how many jobs we really have, either they're missing or they are delayed. Right now, the Fed can't decide if they should cut interest rates because they don't have the full picture. And when the Fed is confused, markets get scared. People sell stocks, bonds, they sell their assets because the markets don't like uncertainty. So, is this the end? Let's explain. Now, a bear market, it means prices going down 20%, everybody gets depressed. A bull market is prices going up, everybody's having a good time. Now, in the short term, yes, we are in a bear market. But looking at it long term, this is still a bull market, okay? And even in bull markets, there still be some pullbacks. Like in 2021, the bull market had 30 to 50% drops and still end up making millionaire. So family, right now, it hurts. I feel it too. But every single time Bitcoin or XRP has dropped this hard in a bull cycle, the people who stayed calm and kept some cash on the side ended up eating good on the way up. If you're new and you're scared, it's okay. Just don't sell everything at the bottom. Just because you hear people panicking on X, TikTok, that everything's going to shit when it's not. It's just, this is another buying opportunity. Zoom out, breathe, dollar cost average in. Okay? This is how wealth is built. Not by chasing green candles, but surviving the red ones. Okay? Look at it like this. When there's red, see green. When you see green, see red. Okay? What did Warren Buffett say? Be fearful when the markets are greedy. Be greedy when the markets are fearful. If this video helped you understand what's going on, hit that like button and drop a comment. And tell me, are you buying this dip or are you waiting? Subscribe to my channel right now. And remember, this is not financial advice. This is just purely for entertainment purposes. And I thank you so much for watching. See you next time.